everyone. This is Nathan from Wall Street Alliance Group. Thanks for tuning in to your weekly market wrap, where we'll break down what actually happened in the markets this week and what it could mean for your portfolio. So here's a quick rundown. On Tuesday, a weaker than expected services report, which tracks things like restaurants, travel, and healthcare, rattled investors, caused a bit of a pullback, especially in tech and consumer stocks. Tariffs are back in the headlines. The average U.S. tariff rate now has jumped to over 18%, which is, of course, the highest it's been in decades. And on top of that, a new 100% tariff on semiconductors unless companies are investing in the U.S. That led to a bold move from Apple announcing a $100 billion investment in U.S. manufacturing, helped the stock pop, and earn them an exemption from that new tariff. Meanwhile, Eli Lilly dropped despite strong earnings, and Uber surprised to the upside across the board. So what's the takeaway here? When markets are running at record highs like this, everyone's expecting perfection. We start to see reactions like this even when good news isn't good enough. Now, that doesn't mean you need to panic, go all to cash, but it could be a good time to take some profits in the high flyers and shift a bit into names that could have real staying power. Think about companies with, say, strong balance sheets, steady earnings, business models that hold up no matter what the headlines say. And that's where you want to be when the market gets choppy, you stay invested, and you've got a little more peace of mind. So let's get into some of the names making the headlines. Apple had a strong week. The company pledged that $100 billion building towards U.S. manufacturing, avoided the tariffs, and it sent the stock higher by about $250 billion in market cap. Eli Lilly beat on the earnings, but the stock dropped after its experimental weight loss pill didn't hit expectations. Just a reminder, even great companies can face short-term bumps when expectations are sky high. Uber crushed it. Revenue came in close to $13 billion, better than expected. They posted strong net income, positive free cash flow, announced a $20 billion share buyback, which tells us that they're feeling pretty confident. And as for those semiconductors, stocks like Nvidia, Micron, TSMC, they all bounced back thanks to the exemptions that are tied to the new tariffs. So the message is build here and you'll be rewarded. Next week, we'll be watching earnings from retail, industrial names. That should give us a better read on the consumer and the broader economy. Inflation data will be next week as well, the CPI. Markets will be looking for more clues about what the Fed will do next with interest rates. If you're wondering whether your portfolio is set up the right way or if it might just be time to adjust, please reach out. Always happy to have the conversation. Thanks for watching. Like and subscribe. And we'll see you next week for another market update.